financial statements are those statements which are prepared at the end of the financial year. So why we are going to prepare at the end of the financial year? To know the financial results of the business. By preparing the statement of profit and loss, we will be able to analyze the net profit or net loss of the business organization. How the financial statement should be? It should provide a true as well as fair financial results of the company. So fake results cannot be entertained here. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today I am going to discuss your Unit 3 of the subject Financial Accounting and Reporting, and this is for second sem B.B.A student, and the Unit 3 name is Final Accounts of a Joint Stock Company. So under your Unit 1, we have learnt about final accounts of a partnership firm. Okay, but it is quite different where the method what you are going to follow under final accounts of a joint stock company is totally different than that of final accounts of a partnership firm. So quite similar, where there we are going to prepare horizontal balance sheet, but here we are going to prepare what? Vertical balance sheet. Okay, so first we have to know the format. So let us quickly begin the session. So let us see what is the meaning of financial statement. So already you know about the financial statement. So financial statements are those statements which are prepared at the end of the financial year. So why we are going to prepare at the end of the financial year? To know the financial results of the business. That is your financial position as well as profit and loss of the firm. Now let us see the meaning of financial statement here. So I have already given you the introduction about the financial statement. So let us see the prescribed meaning for financial statement. So financial statement are the end products of the accounting process. So already I have told you this is the end result of the accounting process, that is preparation of financial statements. They provide information about the profitability as well as the financial position of the business. So how do we come to know the profitability of the business? By preparing statement of profit and loss. Whereas in your partnership as well as sole trading concern, we were preparing trading profit and loss account, whereby we are able to analyze or where we are able to ascertain the net profit or net loss of the organization. Here also, so this financial statement provides us information about the profitability. So whether the business is in profit or loss as well as the financial position. That is, by preparing the balance sheet, we will come to know the exact financial position of the business, where we are going to record all the assets as well as liabilities. So thus, financial statement are the basic as well as formal annual reports through which the corporate management communicates financial information to owners and various other external parties. So what do you mean by financial statement then? How you can define the financial statement? So they are the basic as well as formal annual reports. So which is prepared at the end of the accounting period, where that result has been communicated to the owners as well as other external parties of the organization. Or else in simple you can tell that financial statement are the end results of the accounting process, whereby we will come to know the profitability as well as the financial position of the business, which has to be communicated to the users. So the users might be internal users or external users. So this is about your financial statements. Next, as per section 2 subsection 40 of Companies Act 2013, so because we are going to prepare financial statement as per Companies Act 2013. So this unit is wholly about the financial statement of a joint stock company. So we are talking about the company here, where they have to follow the rules and regulations of Companies Act 2013. So here section 2 subsection 40 of Companies Act 2013. So let us see how did it define the financial statement. So the financial statement relation to a company include the following. So let us see. So according to Companies Act 2013, what the financial statement actually is. Okay, so the first one is a balance sheet at the end of the financial year. So whatever the balance sheet we are going to prepare at the end of the financial year, so that will be considered as what? Financial statement. And the next one is a statement of profit and loss. So by preparing the statement of profit and loss, we will be able to analyze the net profit or net loss of the business organization. Next is cash flow statement for the financial year, where cash flow statement is prepared in order to know the inflow as well as outflow of cash, as well as we are going to ascertain the net cash inflows as well as outflows into the business and what is the cash remaining in the business. So by preparing the cash flow statement, we'll come to know all these. That is also one of the important financial statement. Next is a statement of changes in equity if applicable, and we have to prepare the explanatory notes. So whatever the notes we are going to prepare under financial statement, so it may be under statement of profit and loss or in the balance sheet. So we have to prepare the necessary explanatory notes under each and every, that is statement of profit and loss as well as in the balance sheet. So one-person company, small company and dormant company are exempted from preparation of cash flow statement with your financial statement. So these companies like one-person company, small company as well as dormant company, they are exempted in preparation of cash flow statement since they are the small organization or the companies are very small and the transactions are very less. So they are exempted in preparation of cash flow statement. So hope you are clear about what are included under Companies Act 2013, what does actually mean about the financial statement. Now let us see the next concept, that is financial year. So normally if you see till now you have learned that financial year consists of 12 months where it starts from 1st April to 31st March. Whereas suppose the organization are following calendar year, then your financial year starts from 1st January and ends on 31st December. Now let us see what is this financial year as per Companies Act. So as per section 2 subsection 41 of the Companies Act 2013, all companies are required to have a uniform financial year. Uniform in the sense what? We have to follow the same financial year which shall be a period from 1st April to 31st March every year. So I have told you, so as per Companies Act, that is 2013, so every organization has to follow uniform financial year which starts from 1st April to 31st March. Only companies which are holding or subsidiary of a foreign company. So in a foreign company, they might follow a different financial year. In only such cases, they will have a different financial year which doesn't start from 1st April to 31st March. So they might follow different financial year. They might follow the calendar year also. Okay. So only companies which are holding or subsidiary of a foreign company required to follow a different financial year for the purpose of consolidation of its account outside India may apply a tribunal a different financial year. So when they will have a different financial year, so when their company is located in the foreign countries and if they are following a different financial year, then only in such cases they can have a different financial year, or else your financial year should start from 1st April to 31st March. So hope you are clear about this financial year. Section 129 subsection 1 of Companies Act 2013 requires that a financial statement of the company. So let us see about this financial statement, how the financial statement should be regarding in relation to your financial year. So shall give a true and fair view of the state of affairs of the company. So how the financial statement should be? It should provide a true as well as fair financial results of the company. So fake results cannot be entertained here. So a financial statement should be in such a way that it should provide us true as well as fair view of financial position. Shall comply with the accounting standards notified under the section 133. So how the financial statement should be? It should comply with the accounting standards. So it should follow all the accounting standards which is given by Institute of Chartered Accountant of India. So it should follow all the accounting standards notified under the section 133. Shall be in the prescribed form given in the schedule 3. The prescribed form of the preparation of balance sheet has been given in the part 1. So this you have to remember here. So the financial statements are given under Schedule 3, where your part 1 will be your balance sheet. So part 1 Schedule 3 will be your balance sheet, and part 2 of Schedule 3 will be your statement of profit and loss. And prescribed form for the preparation of statement of profit and loss has been given in the part 2 of Schedule 3. So hope you are clear about. So as per Companies Act 2013, financial statement should be as per Schedule 3, where part 1 will be your balance sheet and part 2 will be your statement of profit and loss of Schedule 3. The board of directors shall present the financial statements before the shareholders for their approval at every annual general meeting of the company. So when they are going to present, when the board of directors are going to present the financial statement to its shareholders in every annual general meeting, the auditor's report, along with that the auditor's report, director's report must be attached to the financial statement of the company. So in the annual general meeting, when the financial statement are presented to its shareholders, so they have to include the auditor's report as well as director report, which has to be attached to the financial statement of a company. Moving on to the next concepts, objectives. So this would be the main concept here, objectives of preparing the financial statement. So what is the main intention of preparing the financial statement? So the first one is to present a true as well as fair view of financial performance, that is profit and loss of the business. So by preparing the statement of profit and loss, we will come to know the exact profit and loss of the business organization. So how your financial statement should be, or what are the main objectives of preparing financial statement? To present a true as well as fair accounting results, that is your financial performance, which means that your profit and loss of the business. And the second one is to present a true and fair view of financial position. So financial position means what? By preparing the balance sheet, we will come across, or we will come to know the value of assets as well as liabilities. So here we will come to know the financial performance by preparing the statement of profit and loss, where we will come to know the exact profit or loss of the business. But the second objective was to present a fair as well as true view of financial position. So financial position can be ascertained by preparing the balance sheet, where we will come to know about the assets, equity as well as liabilities of the business. And the third objective is that to provide information about the economic resource, that is assets and obligations, that is your liabilities of the business. Of course, by preparing the financial statement, we'll come to know the total value of assets and total obligations, that is the liability which has to be paid to the outsiders. And the next fourth objective is that to provide information about the earning capacity of the business. Of course, the whole year, lot of transaction that takes place. So if you ascertain or if you record all those transactions in a systematic manner and prepare the financial statement at the end of the financial year, so we will come to know the earning capacity of the business. So whether our business is in a profitable way or not. So what are the changes that we have to make in order to improve our business? So such decisions can be taken only if our financial statement provides us true as well as fair results. Okay, so the fourth objective is that to provide information about the earning capacity of the business. So how our business is actually running in the market. And the next objective is that to provide information about the cash flows. Of course, I have told you cash flow statement is one of the important financial statement where we will record all the cash inflows and outflows of the business. Thereby, we will come to know what is the exact cash which is there in the business organization. Whether we can go for investing activities or operating activities or financing activities. So, what is the amount of cash requirement actually we will need for the investment? So, such decisions can be taken by preparing the cash flow statement. So, to provide information about the cash flows, whether we have sufficient cash to invest in some other activities or not. And the next one is to judge the effectiveness of the management. Suppose if the organization is in a profitable way, so it is understood that the management is running effectively. Okay, so thereby preparing this financial statement, we will come across to know the effectiveness of management. Next, moving on to the next concept, characteristics of financial statement. So already we have learnt about the objectives of financial statement. Now let us see few of the characteristics of financial statement. So the first one is financial statement are relating to the past period and hence it is a historical documents. Of course, so it is always known that so whatever the transactions we are recorded in the books of account, so these are past transactions which are historical in nature. So financial statement are related to what? Past period. So already these transactions have already occurred where those transactions we are going to record now. So which means that the transactions are historical in nature. Next, they are expressed in terms of money. Of course, the transactions what we are going to record in the books of account. So we have learned from the beginning, we will record only those transactions which is measured in terms of money or in the monetary units. Okay, so the second characteristics is that they are expressed in terms of money. So there are a number of transactions that takes place in the business which is very important and which affects the profitability of the business. Even though still we are not going to record those transactions only because it is not measured in terms of money. So that would be the limitations of financial statement, because we are going to record only those transactions which is measured in terms of money, but there are number of transactions other than that which is very important in the organization, but still we are not going to record in the books of account. Next is financial statement shows the profitability through statement of profit and loss and financial position through the balance sheet. Of course, we have learned from the beginning. So, by preparing your statement of profit and loss, we'll come to know the exact profit or loss of the business organization, and by preparing the balance sheet, we'll come to know the financial position by recording all the assets, equity as well as liabilities. Okay, so this would be the characteristics of financial statements. Now moving on to the next concept, nature of financial statement. So let us see how the financial statement will be. So what is the nature of financial statement? So the first one is recorded facts. So let us see what is this recorded facts. The term recorded facts means that the data used for preparing the financial statement are drawn from the accounting period. So we will take a particular accounting period, so which starts from 1st April to 31st March, and whatever the transactions that have taken place in that particular accounting period, we'll take all those transactions, we'll record in the books of account only which is measured in terms of money, and we will process those transactions, and at the end of the accounting period, we will prepare the financial statement. So, the term recorded facts means that the data used for preparing the financial statements are drawn from the accounting periods. The assets purchased at different times at different prices are shown in the balance sheet at their actual cost. So what happens? So suppose if we purchase an asset at the beginning of the accounting period, do you think the value of that particular asset when we are going to prepare the financial statement will be same? No. So there may be appreciation as well as depreciation. But which amount we are going to record? Actual cost price, whatever we have purchased on that particular day. So that amount we will record in the financial statement. In the sense, so it is understood that we are not going to record the current value of that particular asset. We are going to record the historical cost of that particular asset where it might have changed. So there may be appreciation or depreciation. So but we are going to record in the financial statement already recorded facts which is historical in nature. They are not shown in the balance sheet at their actual realizable value or replacement cost. So I have already told you. So this would be the limitations of your financial statement, because so the value of a fixed asset might have increased or decreased, but we are going to record in the books of account at what price we have actually purchased. But on the date of preparing the financial statement, the value of that particular asset might not be same that of purchase value. But still we are going to record at the purchase value. So which means that we are going to record the historical cost, already recorded facts. Next, second is accounting conventions. Of course, while preparing each and every financial statement, that is at the end of the financial year, so we will follow certain rules and regulations, that is the principles, which is known as what? Accounting conventions. So, accounting conventions imply certain fundamental accounting principles which have gained wide acceptance and which are followed while preparing the financial statement. So, what do you mean by accounting conventions? So, these are the accounting principles which is followed everywhere. So, the main intention is to bring the uniformity in the financial statement. So, these conventions we have to follow here. For example, due to the convention of conservatism. So, what does convention of conservatism tells us? Always be prepared for the worst. So, always anticipate as well as be prepared for the losses. So, for example, due to the convention of conservatism, provision is made in the books of account on the expected future losses, but expected profits are ignored. Likewise, the closing inventory is valued at cost or realizable value, whichever is less. This means that the actual financial position of the business may be much better disclosed in the financial statement. So, which can be, so in the business may be much better than disclosed by the financial statement. So, there are certain conventions to be followed while preparing the financial statement. So, and it is universal in nature. The main intention of preparing or following the accounting convention is to bring the uniformity in the financial statement. But here this convention of conservatism, so here it tells us we are going to expect the future losses, but anticipated profits are ignored here. So, both are important, but according to this conservatism, we have to follow those conservatism because these are universal principle to be followed in the preparation of financial statements. Next is personal judgments. Of course, this is also one of the limitations of your financial statement. So, personal judgments are followed while preparing the financial statements. So, even though certain accounting conventions are followed while preparing the financial statement, still personal judgment of an accountant plays a decisive role in accounting. So, personal judgment is always a limitations for the financial statement. So, personal judgment of an accountant will be followed while preparing the financial statement. Even though we have lot of conventions, accounting rules and regulations, principles, still personal judgment of an accountant gives more importance here. So, for example, the accountant has to decide whether the asset to be depreciated on straight line method or on written down value method. So, it depends upon the decision of the accountant. So, written down value method or some other method, he is to apply his personal judgment in deciding the rate of depreciation also. So, here the personal judgment of an accountant plays a very important role, even though we are following certain rules, regulations, conventions, concepts, but still personal judgment of an accountant plays a very important role. For example, here when you are going to calculate the depreciation, so it is a personal judgment of an accountant whether he has to follow the straight line method or written down value method. Okay, so this would be the nature of financial statements. Now let us see the format of balance sheet. So as I told you, the financial statement comes under Schedule 3, where Part 1 will be the balance sheet, Schedule 3 Part 1. So it gives the format of balance sheet, whereas Schedule 3 Part 2, it gives the format of statement of profit and loss. Now let us see the format of balance sheet, and this is under vertical form. Okay, so in your sole trading concern as well as under partnership form, we have followed the horizontal form. Here you are going to follow the vertical form of balance sheet as well as statement of profit and loss. Now see the format here. We have particulars, note number, figures at the end of current reporting period, figures at the end of previous reporting period. So your balance sheet will always start with the liabilities. So Roman number 1, equity and liabilities. So you have to learn the format. So if you learn the format, it is very easy to solve the problem. Okay, so equity and liabilities, under that first one, shareholders fund. Under shareholders fund, we have share capital, reserves and surplus, money received against share warrants. Now for share capital as well as reserves and surplus, we have to prepare the necessary notes required. But for money received against share warrant, you don't have an accounting treatment. Like share application money pending allotment, for this also you don't have an accounting treatment. Next, non-current liabilities. Third one is non-current liabilities. Under that, we have long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. So non-current means what? It is understood that it is for longer term. So anything or any liability that comes for longer period of time comes under non-current liabilities. Next, fourth is current liabilities, which is for shorter period of time. That is the liability which is shorter period of time, which means that less than 12 months. Okay, so we have short-term borrowings, trade payables, other current liabilities, short-term provisions. Then you have to total all the liabilities. And a second part of your balance sheet will be assets. So first part is all about equity and liabilities, and the second part is assets. So where we have assets, under that first one non-current asset, under non-current asset, fixed asset. Under fixed asset we have tangible assets, intangible assets, capital work in progress, intangible assets under development. And the B is non-current investment, C deferred tax assets, D is long-term loans and advances, E other non-current assets. Next, second one under assets is current assets. So first one was non-current assets, second is current assets, where we have A current investment, B inventories, which means that stock, C trade receivables, D cash and cash equivalents, E short-term loans and advances, F other current assets. You will total. So here when you total, the total of liability should be equal to total of assets. So hope you are clear about the format of balance sheet. Just go through the format. So it is given by Companies Act 2013 under Schedule 3 Part 1. Okay, so half will be liabilities and half will be asset, but it should be in the same order. Okay, so I have to learn this format. Now coming to format of statement of profit and loss, and this is as per Companies Act 2013 under Schedule 3 Part 2. So let us see the format here. So the columns required are same. So but whatever you are going to write under particulars is different. So we'll start with revenue from operation, which means that sales. Then other income. So any income what you have received, interest received, commission received. So anything we have received that comes under other income. Next 3 is total income. When you add 1 plus 2, you will get total income. 4 is expenses. So under expenses we have cost of material consumed, purchase of stock in trade, changes in inventory of finished goods. Next work in progress and finished goods, employee benefit expenses, finance cost, depreciation and amortization expenses, other expenses. So when you add all these expenses, so all the expenses, then you will get what? Total expenses. Okay. So your first one was revenue from operation, other income, 3 total income, 4 expenses. So under expenses we have all these expenses. So under each individual expenses, in the next session we shall see what are included under each and every individual expenses. Next, fifth will be profit before tax. So how do we get profit before tax? Your total revenue, that is total income, minus 4. That is your expenses. Expenses in the sense, whatever the total expense what we get here. So 3 minus 4, you'll get profit before tax. Next is tax expense, where we have current tax. So if you add or if you minus 5 minus 6, you'll get profit after tax. That is profit before tax minus tax, current tax. So you'll get profit after tax. So this will be the simple format of statement of profit and loss as per Companies Act 2013 under Schedule 3 Part 2. So my dear students, so this was about the format of balance sheet as well as statement of profit and loss. So my dear students, hope you have understood today's session. See you all in my next session with a new concept. Till then, take care. Thank you.